What's up, dear friends? Hello, everyone. I hope you're feeling well and that everything's all right with you. So, I want to show you a very simple strategy that I developed. It's really simple 100% automatic, mechanical, systematic, and it's shown some nice results, as you can see here. So, as you can see, this is the equity curve of the strategy, right? This is the profit over time. You can see there's consistency here, right? I tested it from 2015 to 2025, but it only gave me data from 2019, which is also fine. We've been through quite a lot in the last 6 years. I tested it on a NASDAQ futures contract on the micro, okay, using 10-minute Japanese candlesticks. And this is the result. We can dive a little into our metrics, into the statistics. A very nice profit factor of 1.47. In total, it made 455 trades for me in these 6 years. The strategy's success rate is 73%, which essentially means that it has a 73% probability of winning the trade, and 100 minus 73%, which is 27%, is its probability of being wrong and losing a trade. So you can really see that in total, its wins, it has 334 winning trades here and 121 trades that it lost. You can see the risk to reward here, which isn't good, but because we have a high success rate, it compensates, and in the end, that makes the strategy profitable, as you can see. So the risk to reward here is negative. It's negative, right? It's not good. But again, we actually have a pretty high success rate, so that makes the strategy profitable overall, okay? You can think of it like insurance companies. An insurance company, about 95% of the time, it will win, right? Why? Because you pay it every month. You pay and you pay and you pay. That means every month it's beating you. And then on some bright day, you get into an accident, and then it basically has to pay the other insurance company or the other drivers. So it's basically winning against you 95% of the time. You can also think of it this way. Actually, we win most of the time, but when we lose a little more, and that's okay. Now for the strategy is very simple. Let's see a trade here, for example. Here we have a really great trade opportunity right here. So just like this, if my RSI indicator crosses from below to above the 30 level, which is a potential signal, and the review price actually closes above the high of the previous price, specifically above the high of the previous candle, and the price is also above the exponential 50, then I enter a long position. Now, when do I get out of this long? I exit this long position when my RSI, which is the relative strength index, reaches a value of 80. Once it hits about 80, I'm out of the trade. Enters at 30, leaves at 80. Now, the catch here is that there is actually no stop here at all. I don't put a stop loss here, and I don't have a stop loss here in this approach. In this particular strategy, I simply don't have a stop. Okay, I tested it thoroughly and saw that this strategy really loves air. The more air, the better it performs. My only stop is if the RSI indicator touches 80. Okay, or of course at the end of the trading day, because this is a daily strategy. Let's see another example here. Here we are. This is a small scalp. The RSI here passed 30. It moved from the bottom to the top and touched 80, and we exited the trade. Let's now look at an example of a loss. Notice that it loses, and one loss, but right? But okay, there's nothing to be done. In the end, friends, the strategy is profitable, right? You can see statistics. Statistics don't lie. But here too, we actually entered the 30-day live destruction, and notice that the whole day was very difficult. It didn't touch 80, and we exited at the end of the trading day at 5 o'clock New York time. I tested it on 10-minute Japanese candles. You can also test it on 5-minute candles. I believe it won't be that good in practice, but let's see. I was surprised. I have to say, here too you can see consistent good spending, yes? Keep it, it's not bad. It's really not bad for a strategy that does everything alone. Because for you to hide, you just have to press play and that's it, right? You're not doing anything. Not bad, really not bad. Matrices haven't changed, except that the profit factor has weakened a bit. It's entered more fares. The forgiveness percentages are pretty much the same. The risk to reward is pretty much the same. Okay, I think we understand the strategy. Now let's go to the code. This is the short story, my friends, and it is a very pleasant, very simple one indeed. So first of all, what I am doing is adding all sorts of different things here to the chart. So I'm adding the RSI indicator here on the chart because I want to see it clearly on the chart. I'm also adding the EMA indicator here on the chart since I also want to see it displayed. As you can see, I have added the RSI and I have also added the EMA. Here is the setting: RSI 6.3, EMA 50. In addition to that, I've also added another data series here, which looks like a 4-hour chart, just to check and confirm the direction of the trend. And here, basically, every time there's a new price in the market, as you can see on price change, I recalculate things and make a decision. So here, I'm basically checking if I'm not currently in a position, then what do I want to do? I want to look for an opportunity, right? So I'm looking for an opportunity here. So I check if the RSI has crossed upwards, cross above the 30 value, okay? And if the closing price closes above the high of the previous bar, and if the current price is above the exponential moving average 50, and my 4-hour bar is green, notice the closing price is higher than the opening price of that same bar, which means the bar is green, right? So if all of this happens, I enter along, okay? So that's for the entry. That's for the entry, okay, guys, just to clarify. And if I'm already in a position, then it'll send me here, right? Because look, position dot market position equal to market position dot flat. That means I'm not in a position. But if I am in a position, it'll send me here, right? So I check if I've crossed, okay. If the current value of the RSI, which is the relative strength index, has crossed the level of 80 upwards, I exit the long position. That is the complete strategy, okay? That's the whole strategy, guys. That's it. End of story. Notice, simplicity works. You know, we humans always tend to make things complicated, but guys, it works. It might seem a little bit foolish, and it might even go against our usual logic. What, it's really that simple? But guys, believe it or not, it works. It just works, plain and simple. All right. So for example, you can throw in, let's say, $1,000 and then trade it with one micro lot. Yeah. You just let it work for you. Simply press play and that's it. If you're feeling that scared or nervous, you can even do it on a demo account first. And again, guys, I want to be very clear. I'm just saying nothing I'm saying here is a recommendation for trading or financial advice. It's just to enrich your knowledge and give you some inspiration or ideas. Okay? That's it, really. All right, guys, thank you very much for really listening to the video. I'll definitely see you in more videos. I hope you enjoyed it. Feel free to click subscribe, give it a like, leave a comment, whatever you feel like. That's it. All right, I'll see you next time. Have a great week.